Hey, good morning, everyone. Wow, what is happening here? Hope you're all doing well. Welcome. It is Wednesday. It's Wednesday, November 28th. Or that's a lie. November 29th. Wednesday, November 29th. As we take a look at the markets, we'll break down what we have in terms of our futures trade plan for the day. And then what we're going to do is break down some of the news that occurred, what I could see for the markets going forward, and some other expected news, right? So let's dive right into this. First and foremost, right, one of the greatest investors that we've had in our generation, right, Charlie Munger, Warren Buffett's right-hand man, passed away yesterday, notified by Berkshire Hathaway at the age of 99. He was very close to actually hitting that 100, that century mark. And here's a quote: "Berkshire Hathaway could not have been built to its present status without Charlie's inspiration, wisdom, and participation," Buffett said in a statement. And Munger was the vice chair of Berkshire and one of its biggest shareholders with an estimated net worth of $2.5 billion. Together with Buffett, the pair transformed Berkshire from a textile manufacturer into a giant conglomerate in a partnership that lasted nearly 6 decades. So, one of the most prolific investors that we had in our generation has gone, and it was all through news yesterday, right? A lot of people talking about it, especially on social media platforms. Now, some of the more market-driving and affecting news that shaped up. We just saw a breakout rally of a nice distribution on the S&P 500 and other markets as the continuation of the upside persists, while a lot of people are still trying to short this with the expectation they're going to find the tops while we enter into a holiday season. This is a very important piece of information as we enter into a holiday season. Low volatility, low volume, with the expectation that dealers and big money is positioned long gamma, suggesting that there is upside expectation, a slow grind higher and higher and higher until we come into some weeks into January. There is a potential for pullbacks, but I think they're going to be more shallow than a lot of people do think. Now, yesterday we had multiple Fed speakers that came out. We also saw dovish signals from the Federal Reserve that are reinforcing what traders have been pricing in since the end of October, when the central bank held rates for the second consecutive meeting, and a dot plot that suggested one more hike was to be called into question. So since then, stocks have risen at a rapid rate, with the S&P 500 climbing out of the correction territory in only 16 trading sessions, marking the fastest comeback since the 1970s. Besides lifting markets and risk assets, the prospect of cheaper money saw the 10-year Treasury yield drop overnight below 4.3, and you can see on my screen right now 4.284 is where we're trading after touching about 5% just prior to the last Fed meeting. So there was one thing I wanted to mention about this. So the long bond trade is starting to manifest pretty well. I think that long bonds are going to be an underrated potential mover into 2024, into potentially the end or the middle point of Q1. The latest, two of the most hawkish FOMC officials who led the charge for higher rates last year are getting comfortable with holding policy steady, backing expectation that the central bank's hiking cycle is done. So Fed Governor Christopher Waller said on yesterday that he's increasingly confident that monetary policy is now in the right spot to slow the economy and bring inflation back down to the target 2%. So Governor Michelle Bowman also stopped short of endorsing an increase in next month, which the meeting, I believe, is December 13th. I need to double check that, but I want to say December 13th, conditioning the need for further rate hikes only on incoming data that indicates progress on inflation has stalled or is insufficient to bring inflation down to 2% in a timely way. Another piece of information is that Bill Ackman loaded up on the bet that yields are going to drop, meaning bonds going up, with the Federal Reserve expected to cut rates actually in Q1 of 2024. That's his bet. So investors appear to be more enthusiastic, especially armed with the economic data to support them, including recent soft numbers in inflation and the job market. We also saw that prelim GDP numbers came out 5.2% compared to the 5.0% expected here this pre-market session. And the odds that the central bank will cut its target policy rate in the middle of 2024 have been on the rise, and some, like Pershing Square's Bill Ackman, like I said, right, is even pricing in rate cuts sooner into Q1. So as we take a look at this, right, we're coming into a slower seasonality in the market. December starts this Friday, right? Crazy to think about realistically. And I think that if we didn't get that pullback based on the plethora of sellers that had accumulated over the last few sessions, I think that the pullbacks are going to be few and shallow leading into the next few weeks, right? I know a lot of people are placing very bearish bets, and a lot of the reasoning behind that is that volatility is so low and premiums for puts are so cheap. People are hedging. People are speculating. People are looking for that volatility pop, and I think that's going to be suppressed until we funnel into the new year. So if we take a look at the VIX and how that's shaping up here, a lot of people drawing technical analysis, blah, blah, blah. Yesterday, the VIX popped up, what was it, like 12% before getting just spilled back down, trading into the 12 handle now. So I think that people are going to be very surprised as how low the sustained VIX can possibly stay without seeing an exaggerated move to the upside, right? So just keep that in mind. In terms of other news, not really too much. Checking this out, we have EIA petroleum inventories at 10:30 a.m. Eastern today. We have survey of business uncertainty at 11. Fed's Mester speaks at 1:45 p.m. Eastern. Taking a look at the overall market. We've escaped the distribution that has been plaguing us for what seems like a century now, but it's only been about 2 weeks. We've now escaped above that low 70 threshold, and you can see yesterday there was an area based on order flow where a lot of market buy pressure came in around 74. 74, and into this area you can see a lot of volume into that, like mid to high 70 on the overnight session. So if I want to see this upside continue, one of my main targets is between 90 and 94 as a large area where sellers could attempt to see some kind of reversal, right? But if I want to see this move continue, I'd really want to see them bid the mid 70s, at the lowest the higher 60s realistically. But that really takes away from the breakout that happened on the overnight session. So shallow pullbacks, the better to continue this trend momentum move that could see us into 46.08, 10 and 46.22, 24 potentially today, right? I am still looking for these upside moves, but that would be confirmed as long as prices stay outside of the distribution and continue to hold this current imbalance. So what I'm looking for is that continued move on pullbacks. I wouldn't be surprised to see some kind of profit taking earlier on the session before some bids try to step in. That's kind of what I'm looking for. That's kind of what I'm breaking down. And what we're going to do is open up our live trading room and see how this progresses, right? If there's any change in sentiment as the market opens and traders and large positioning comes into the market and decides what they want to do with that. But generally speaking, we should see the continuation after this expansive move has commenced here pre-market. Now, another thing to mention is that we still have our holiday sale going on at TRADEPRO Academy. Go check that out. The first month is a 78% discount from the general fee at TRADEPRO Academy. So go check that out. We're going to be trading our live trading room this morning with all of our members, our new members, as we roll into this holiday season. Otherwise, you can check out community.tradeproacademy.com for that free Discord. And yeah, generally speaking, I'm looking to see if we can sustain some of these pullbacks. sell some puts maybe into this. I don't know what the expansion and the volatility looks like to be flat out long calls, but there's a potential, right? I'm going to be very cautious as we enter that 90 to 94 on the S&P 500 futures, because it is a major area that's proving, right, the start of this resistance as we've pulled down about 6 handles now. 5 handles, whatever. So let's do this. Let's open up our live trading room. I hope everyone has an amazing trading day. It is the middle of the week, right? It's Wednesday, right? It's the middle of the week. Let's finish the week strong and let's not do anything crazy.